Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Sino Land Company Limited, interim report. Sino Land Company Limited offers a diverse range of businesses and services across various sectors. At the core of its operations are property-related activities, including property sales, rental, hotel operations, and investments in securities and financing. The company's extensive property portfolio comprises shopping malls, offices, industrial buildings, residential units, and car parks. In addition to property management, Sino Land provides a wide array of services such as cleaning, building construction and management, financing, administration, security, mortgage loan financing, secretarial, management, project management, securities investment, consultancy, and deposit placing. The company also operates hotels and engages in real estate agency and trustee-related services. Furthermore, the company's geographical presence spans across mainland China, Hong Kong, Singapore, and Sydney, with a total attributable floor area of approximately 18.9 million square feet. With its extensive range of businesses and services, Sino Land Company Limited has established itself as a significant player in the industry. Unfortunately, I do not have access to the text you provided. However, I can still provide a general overview essay on what could cause Sino Land's stock price to increase significantly in the past year. The stock price of Sino Land has increased significantly in the past year due to several factors. One major reason is the company's strong financial performance. Sino Land has consistently delivered robust revenue growth and profitability, which has boosted investor confidence in the company. The company's diversified portfolio of properties, including residential and commercial developments, has also contributed to its success. Another factor that could have driven up the stock price is the improving economic conditions in Hong Kong. As the city's economy continues to grow, demand for housing and office space increases, benefiting companies like Sino Land. Additionally, the company's strategic partnerships with other major developers and its expansion into new markets may also have contributed to its rising stock price. Furthermore, changes in government policies or regulations can also impact a company's stock price. If there are any favorable policy changes that benefit the real estate sector, it could lead to an increase in Sino Land's stock price. However, without more information on the specific factors at play, it is difficult to pinpoint the exact cause of the stock price increase. In conclusion, the significant increase in Sino Land's stock price over the past year can be attributed to a combination of factors, including strong financial performance, improving economic conditions, strategic partnerships, and favorable government policies. Sino Land Company Limited market capitalization of $110 billion is significantly larger than the average industry peer of roughly $2 billion. This shows that Sino Land Company Limited holds a significant advantage in their industry. Sino Land Company Limited trades at a higher price-to-earnings ratio of 26 times and a higher price-to-book ratio of 0.63 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The balance sheet appears very conservative, with liabilities representing only 7% of total assets. While this indicates low financial risk, investors should examine the composition and quality of the company assets to determine whether they justify the current valuation. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. Although shareholder equity has increased, the share count has risen while revenue is declining. This raises concerns that equity growth may be driven by dilution rather than business performance. The sustainability of the business model remains unproven. The company have a dividend yield of 5%. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth in the company's operations can be attributed to several key factors. The sales of residential units in completed projects have been a significant contributor, as seen in the case of the reserve residences in Singapore. Additionally, the improvement in the residential sector, with stable occupancy rates, has also driven revenue growth. Furthermore, modest gains in the retail and office sectors, due to increased occupancy rates, have also contributed to the overall revenue increase. The strong market reception for One Central Place and the solid tourism rebound in Hong Kong, with an 11% year-on-year increase, have also been major drivers of revenue growth. The higher occupancy and room rates in Sydney operations have further added to the company's revenue. Moreover, the strong momentum in the Hong Kong stock market and record-breaking IPO fundraising have created a favorable environment for business growth. On the other hand, the primary drivers of revenue decline are largely attributed to soft retail environments at the beginning of 2025 and decreased occupancy rates in the industrial sector. The property rental revenue has also seen a decline of 4% due to these factors. The company's financial performance indicates a positive trend in its operating cash flow. According to the audited figures, the company generated $2,318 million in operating cash flow. This suggests that the company is able to cover its operational expenses and generate surplus funds. Furthermore, the trade payables are significantly lower than the current or up to 30 days trade receivables. With trade payables of $63 million compared to trade receivables of $168 million, it indicates that the company is managing its accounts payable efficiently and effectively. This efficient management of cash flow contributes to the overall positive operating cash flow generated by the company. The company's financial situation has undergone significant changes in terms of debt level and interest expenses. The company's debt level has decreased substantially, with a reduction of $967 million from $1,799 million to $132 million between 30th June and 31st December 2025. This indicates that the company has made efforts to reduce its debt burden. However, it is unclear how much of this decrease can be attributed to repayments versus other factors. Unfortunately, there is no information provided on interest expenses, making it difficult to assess whether these have changed significantly as well. Management is optimistic about the company's outlook, citing strong residential leasing performance that is expected to continue. To capitalize on rising market demand, they are repositioning One Central Place as premium residences. This strategic move will not only boost revenue, but also enhance the overall customer experience. In addition to this tactical shift, management emphasizes the importance of cost discipline and operational efficiency. By maintaining a lean operation, the company can allocate resources more effectively and drive growth without compromising profitability. Furthermore, their commitment to sustainability is evident in their green living, innovative design, and community spirit strategy. This approach not only reduces environmental impact, but also fosters a sense of community among residents, making One Central Place an attractive choice for those seeking a unique living experience. The company has a history of paying dividends to its shareholders. In recent years, it has continued this practice by declaring an interim dividend of $0.15 per share. This payment is scheduled for April 23, 2026, with the record date set for March 18, 2026. That concludes the financial summary for Sino Land Company Limited. Feel free to comment below, and I will be happy to answer them when possible.